of the CattleUSA Daily Podcast. Today, we are welcoming back Dan Gerhold with the CattleUSA insurance team, and we are excited to bring you guys your market report. What is happening in the world right now? What has happened over the past week? We're discussing all of it, and then we even go into the rest of the summer, what we're kind of feeling like for the next few weeks, and then going into fall. What does fall look like? What can we anticipate for the markets and managed money over the next few weeks? So without further ado, let's go ahead and get into this podcast episode with Dan. Dan, happy Friday. Welcome back to the podcast. It's been a minute.
It has. Yep. A little R&R. Markets went wild while I was gone and come back, and now they go the other directions.
Pretty much.
Send me on vacation more often.
Send you on vacation, but you're not allowed to come back because that's when it all went to crap, was when you came back. So you're just, you got to go live at the lake now. Sorry.
I'd be willing to take one for the team.
Well, what is happening with the markets? What's going on with them? Break it down.
A lot of chop. This week, you have a big week like last week. Of course, you're going to see some chop. You know, either you're going to be straight back down this week or you're going to chop around, find out, you know, what's the fundamentals like. Box beef has kind of slid back pretty hard from its spring highs now. Not anything unseasonable, just the dog days of summer finally catching up with us. You know, we went from that 394, 395 high in the choice. You know, I think we're pulled back now to 374. So, I mean, you're talking about a whopping 5-6% correction. This thing still has some room. It could pull back even harder over the next month, and I'd be perfectly comfortable. The big $1 billion question would be, what do we do coming into this fall and winter? Do we see that push back towards that 400 again, you know, as we near those Christmas ribeye orders? That's basically what's been struggling lately. It's not your burger, your grind. It's not your fats. It's your high-end cuts. Not uncommon. We all know it's hot dog and hamburger weather. So, you know, if the consumer is in love with beef as much as we think they are, I'd just expect a normal rally back going into that fourth quarter. So just kind of in a lull at the moment. You know, we've got cattle on feed next week. You've got the biannual all cattle inventory report next week. So I think a lot of eyes are on that to see if we're seeing any heifer retention, or let me rephrase that, if the USDA is expecting any. But inevitably, all of that going into it, you're talking about what are traders, how are they positioning themselves for both of those reports. So I'm in the camp. Honestly, fats are probably trading right where they should be on the futures market for the moment. You know, there's still a positive basis, which is what it should be at all-time record highs, even though it's abnormally positive. We're talking about $5 to $7 in the South, and you know, you're $10 to $18 in the North, which is, like I said, abnormally high, but also not abnormal for big bull markets. You know, coming into next week, it looks like the trade this week is going to be more steady with last week, which I kind of view as a disappointment. You know, there was a lot of us going into this week early thinking we were going to see a higher cash trade, and it turned out to be steady. So I don't want to see those trends change. You know, we had the leverage this week and just didn't do anything with it. It's like that sport, you know, baseball team that just doesn't do anything when they have every opportunity to win. So wouldn't be surprised if we see cash soften or just kind of stagnant again next week. You know, Packers are probably going to sit on their hands, wait out for the cattle on feed, see if they can spook this market lower ahead of time, shake some low-hanging fruit out of the tree early on, lower prices, and then see what the rest of the week brings next week. But overall, it's just the summer cattle market, you know, county fair season. I was pretty optimistic and hopeful that we were going to put a 230 summer low in there, 3 weeks ago in the North, and, you know, 220 and 222 in the South. I was hopeful that was going to be our summer low and we could moonshot this thing, but inevitably, there's still a lot of summer left. We've still got to come into that big slug of calves here in September, October in the North. Should start seeing some really, really tight numbers in the South as far as the cash market's concerned. You know, we had that shutdown December, January, not a big import time for Mexican feeders anyways, but, you know, those calves that would have crossed, inevitably they would have been set for this, you know, late August, September, October market. So I'm still optimistic for that time frame, especially as you're aware. I'm in the camp that we're probably seeing some heifer retention going on right now. I know the entire industry is not thinking that, but I'm pretty confident it's begun. I don't think to a large scale by any means, but you wouldn't see $4,000 bred heifers if guys weren't eagerly buying them. So overall, the feeder cash market has just been unbelievable. I mean, you watch those sales up north and you're talking 850s bringing 340, 9 320, you're seeing 10 weights 310, 11s. You just you can't make this up. It just came out of nowhere. Yeah, this market's been extremely strong forever, but there's a ton of risk as well. I ran a poll on social media because the last 2 months there was a lot of guys buying feeder cattle that didn't pencil against deferred futures. So in the cattle industry, we call that betting on the come. It's very, very common. So I ran a poll to see if anybody was using the rally we had last week in futures to hedge off their risk. Did not like what I saw. We'll find out when we get out to those finishing dates if they needed those hedges or not. But inevitably, I think a lot of people are scared to manage risk just because they've been run over on their hedges so hard. It's a perfect example why LRP and put options are a viable tool to use for markets like this, because inevitably, I mean, some of these hedges are $20 to $30 underwater, where an LRP would only be, $5 to $10 in premium. Make $800 a head and give up $100 a head to LRP. I'd do that. So I'd like to see producers start stepping up their aggressiveness on hedging. I made some comments earlier this week that I'd like to see as we start placing cattle that are going to be, market ready fats after the first of the year. I'd like to start pushing towards closer to that 100% hedging mentality. Whether we're using that LRP, futures hedge, contracts, puts, there's all these tools in the toolbox, and depending on the time of the year and the producer, we can talk through it with them. But I'd still like to be more aggressive on the hedging side because we're at such elevated levels, and we just don't know when we finally hit that plateau or that peak when it comes to consumer spending. So it's been unbelievable. I always caution myself never get bearish in the summer months. So there's still opportunities going into the fall and winter, but inevitably, this market could slip away from us at any time. So I think we've got to be prepared. Get the floors set for now. If we get that big run up in the fall, that's definitely possible. You can step in and sell some futures or contract some cattle, or just you can continue to play in the cash space. So it's just there's a pile of risk on these cattle right now.
Yeah, I think we've said it a ton in the past few weeks that the market is extremely volatile right now, and there is a lot on the line for a lot of people. And we've said it before, and I'll say it again, that we need to start looking at risk and our risk management tools that we have as business tools. And a part of our toolbox, like you said, in our playbook that we're using in all of our businesses. It's just one of those things that we have to start opening ourselves up to it and not let ourselves get in situations where we are losing our tail every single time, and look at it as it's like an expense, just like feed is, right? We've got to have feed to feed our cattle. We've also got to have protection to be able to continue to buy cattle, continue to keep our businesses viable in the end of the day.
Absolutely. I mean, it's been said many times by many people right now, one fat steer is worth more than a semi-load of corn, and now you're knocking on one fat steer in a lot of places is worth what an acre of grassland might be, or two fat steers, depending on the location. But that doesn't happen very often in history. Have cattle been worth what they are, compared to corn and compared to land? So I think we really have to look hard and realize, it really doesn't matter who the producer is or what size they are. The amount of dollars they're playing with right now is pretty extreme. And you can still be bullish and optimistic for this market because demand is still rock solid. But inevitably, someday we'll lose that. We don't know when, and the best thing you can do is have it ahead of time.
Precisely. Any other highs, lows, things that we need to chat about that are going on in the markets right now?
Grain's getting a nice bounce today. Kind of wonder if that has more to do with the Russia, some more sanctions put on. Excuse me. I don't know, a great corn crop in just about everywhere you go. There's guys that have some corn down. There's guys that, got drowned out, but inevitably there's a lot of acres of corn that got planted and it's looking pretty phenomenal nationwide. I don't think we have a huge amount of risk in the corn market to $5, but you could see a bounce here to 450. Wheat market also getting a nice bounce. Like I said, probably more to do with Russia today. It'll be interesting as we open next week up what that does. Optimistic for the moment, just a lot of chop everywhere. Just really finding out what this managed money, what these funds can do. It doesn't matter who you are or what your position is, trading paper right now. You're getting beat up one day or the next.
Yes, this is definitely just a hold on and ride it out while we can type of next few weeks. And that's pretty much the definition of the dog days of summer. It's a trend we see pretty well every year. It's nothing new. We're just got to push through for a few more weeks, and then we can look towards the fall, and hopefully we're sliding that scale back up to a little bit above the higher optimism as far as the way that the market is going to continue to go for the fall. Any thoughts on fall? I know you kind of touched on it a little bit. We don't have our crystal ball. I wish we did, but any thoughts as we start to transition into that?
Looking for a big hole here, late September, October, November, December. Looking for a big hole on the cash fat cattle side. It'll be interesting to see what the slaughter pace does. Obviously, they're not in a hurry to ramp up slaughter and make that hole larger because it's just going to push boxes lower and make their margins worse. But inevitably, I'm looking for a big hole out there, and I'm really hoping that the producers use that leverage that they should have when we get out there, if I'm right. Feeder cattle are probably going to be a result of that. It's not uncommon to see that September, October yearling feeder price, step back as guys start pulling off grass and we get some bigger numbers coming. But once again, I can't get wildly bearish feeder cattle right now just from what feed yards are willing to pay. I mean, you're selling 340 fat cattle in the north right now. Why not buy a yearling steer where it's priced? The sell-buy works, but at the same time, there's a pile of risk. I mean, I remember when the first 8-weight steer brought $3, I thought that was insane, and now 340. I mean, come on, are we going to hold out and sit on our hands to protect and wait for $4? I mean, what's the magic number, I guess, is my question for these guys. So we've got a lot of potential for this fall. It's just a matter of getting through there without causing too much damage. I'd like to see choice boxes really hold that 355 number this summer. And then we've got that potential to probably run it back towards that 380, 385 level. If we do that, I think the consumer's still going full speed at the beef counter. Retailers have really tried to improve their margins here in the last, I would say, 2-3 weeks. I think that's going to continue as it normally does this time of year. So just buckle up, hold on. Hopefully, it's not a complete train wreck over the next 60 days and we get through it.
Absolutely. Well, Dan, as always, thank you for your time and coming on, sharing just your thoughts, opinions, and everything else that's going on in the markets. We appreciate it as always. To all of you listeners out there, we talked a lot about risk today. If you want to get yourself covered, make sure you get down to the show notes and check out our CattleUSA insurance link where we partner with Dan and his team to offer that to you guys at just really, really great times to get onto it now and get yourself covered. So check out those show notes, get a hold of our team, and we'd be more than happy to help you with that. Dan, thank you for your time. And to all of you listeners out there, have a blessed rest of your week, and we'll see y'all next time. Have a good one, y'all.